Are you tired of your high monthly mortgage payments and worried about the complicated process of refinancing? Well, I'd like you to imagine a process that's so simple where you could actually save money without having to do an appraisal or income verification. If that sounds like something you're interested in, then you're in the right place. In today's video, we're going to talk about the FHA Streamline, which is a minimal doc refinance for FHA loan holders. If this sounds intriguing at all, do me a favor and stick around so that you can learn how you can effortlessly lower your monthly mortgage payment with minimal hassle. Let's get started. What is an FHA Streamline refinance? An FHA Streamline is a mortgage refinance program through the Federal Housing Administration, the FHA, that allows homeowners to refinance their FHA insured mortgage with less documentation and underwriting, essentially making the process streamlined. The program is really intended to make the process simpler, a little bit easier, as well as cheaper, and one of the biggest benefits is the process is also typically faster and way simpler than a traditional refinance. And just to be clear, the main features of this program is that it's streamlined with no appraisal requirement and no income verification, which in turn leads to the benefits of a simplified process, lower mortgage rates, which in turn leads to reduced monthly payments. Now, if you're watching this going, well, who actually qualifies for an FHA Streamline? Well, that's exactly what we're going to dive into right after you hit that thumbs up if you find any value in my content at all. And if you want to stay updated on everything FHA, mortgage, and real estate related, do me a favor and subscribe to the channel. So one of the really cool things about FHA loans is that it's actually easier to qualify for the Streamline than it was the original FHA loan, which means the only thing you really need to have in order to qualify for an FHA Streamline is having an FHA loan to start. In addition to that, you must be current on your current mortgage. You can't be behind on your current mortgage. You can't have payments owed and qualify for this program. On top of that, you have to be at least 210 days from your original closing with no late payments in the last 3 months. Now, I know some people are going to ask, what are the credit score requirements when it comes to an FHA Streamline? There's not really any credit score requirements, but the lender is likely going to run your credit not only to verify your mortgage payment history, but also to see where your score is, because essentially that's how they're going to price the loan when it comes to determining your mortgage rate. Now, a moment ago, I said they're likely to run your credit score. And the reason for that, because not all lenders are going to approach this process in the exact same way. The FHA has certain guidelines when it comes to how they underwrite loans. Well, as we discussed in our original video about FHA loans, many lenders out there have overlays on their programs and they require certain things that FHA doesn't necessarily require when it comes to underwriting a loan. And because of that, many lenders out there are going to want to run your credit, which essentially is the only real qualifying item that you have when it comes to refinancing your loan. Because there's no appraisal, the value doesn't really matter on the property. Because there's no income verification on the property, you're not having to provide pay stubs, you're not having to provide W-2s, you're not having to provide any of that information. They're really just making sure you're making your mortgage payments on time and that there's a net tangible benefit to you as the borrower. So the next question is, what is a net tangible benefit? Well, FHA looks at that as a 0.5% savings on your interest rate. Now, that could also include the mortgage insurance. So you have to save at least 0.5%, either by taking your mortgage insurance down from, say, 0.85 to the new rate of 0.55. There you would save 0.3. So then you would need to at least save 0.2% on the interest rate in order to meet that net tangible benefit guideline. But let's say, for example, you got an FHA loan just a year ago, and when you bought it, interest rates were at 7.5% on an FHA loan. And today, interest rates on FHA are 6.5%. Well, that you're saving a full percent on the mortgage. So you meet the net tangible benefit guidelines in order to refinance. But let's use that same example. Let's say, for example, you got an FHA loan last year at 6.875%, and interest rates today are at 6.5%. Well, in that case, you're only saving 0.375%. And because mortgage insurance was the same last year as it is today, your mortgage insurance isn't changing, so you're not getting a benefit there. So in that case, of the 3/8 savings, you're not meeting that net tangible benefit guideline. So assuming nothing else changes, you're likely not going to be able to refinance that loan until rates go a little bit lower. But please understand, I just made those rates up. That's not where rates are today. In fact, you should be having that conversation before you go through this entire process. Make sure you contact a lender, you tell them where you're at, you tell them what you're trying to do, so that they can guide you through that process and help you understand whether or not there's actually a benefit to you and whether or not it makes sense. There are some things that you need to consider when going through the FHA Streamline process that fall on that con side of the list, which we're actually going to talk about in more detail in just a moment. But I did want to be very, very clear. Just make sure you're working with a professional. Make sure you're working with somebody that understands this loans. They're not just trying to sell you a refinance to sell you a refinance. They have your best interest in mind. Now, if you're watching this going, where do I start? Well, I actually created a referral link in the description of this video where you can work directly with me and my team to go through this process. And with that, we would love the opportunity to help. So if you don't have somebody you trust and you're considering doing an FHA Streamline or just a refinance in general, do me a favor and check that link below. So from here, we're going to cover a couple of different things. We're going to talk about the application process. We're going to talk about costs and fees. And we're also going to be talking about the pros and cons that I mentioned just a moment ago. So what does the application process look like when it comes to doing an FHA Streamline? Well, it's actually rather simple. You're going to do a loan application just like you did when you originally got your loan. But from there, the process is rather simple. You're only going to have to provide a couple of documents. One is a current mortgage statement. On top of that, you're going to have a copy of your homeowner's insurance, the declaration page, to show exactly how much coverage you have per year and how much money you're paying for that coverage. And the only real thing on top of that you're going to have to provide is a photo ID. Once the lender has all of that information, they're going to order title and escrow, and then essentially they're going to have a file that they're ready to submit to the lender, assuming your credit score meets the guidelines in order to get that loan approved. Now, here's what I'll say. If you were able to get an FHA loan originally and you haven't missed any mortgage payments or done anything crazy with your credit, there's a really high likelihood, really high probability that you should be able to refinance without any issues. But here's one of the cool things. If your credit score is actually improved during that period of time, not only are you able to take advantage of lower rates if rates have dropped since that period of time, you're also able to take advantage of that boost in your credit score. So there is a high likelihood if you bought when interest rates were really, really high, or you refinance when interest rates are really, really high, now that they've come down a little bit, you're able to take advantage of that. But if your credit score is also improved, you're also able to take advantage of that. So with all of that, hopefully there is a huge net tangible benefit to you as a borrower. But here's what I'll say. It's not going to make sense for everyone to refinance out there. If you got your loan back in 2020, 2021, when interest rates were in the low 3% range, there's not really a reason for you to refinance out of that mortgage for any real reason. Now you might say, well, Jeb, yeah, I have a really low interest rate, but I'm paying 0.85% on my FHA loan on mortgage insurance. Okay, well, look at where interest rates are today with FHA. All you need to do is take your current interest rate and add the mortgage insurance to that, whatever percentage that was. So let's just say you have a 3% interest rate with FHA. And back when you got it, it was 0.85% for the mortgage insurance. Well, that means your effective rate is really 3.875%. Compare that to where interest rates are today. There's no world in which you should be refinancing out of that lower rate loan into a higher rate loan. FHA Streamlines here are really for those that bought when interest rates were higher than where they are right now. But here's one of the cool things. As interest rates continue to go down, there's going to be more opportunities for you to take advantage of this refinance. And one of the cool things about FHA Streamlines is you can do it as many times as there's an actual benefit to you as a borrower. So if interest rates make sense for you now, you should probably do it now. And if interest rates move lower in the future, then you can take advantage of it then. But here is what you absolutely have to consider. And here's where it's not going to make sense for some people out there when they're considering refinancing is every single time you refinance, there's a high likelihood that you're going to have some costs associated with that loan. Even if you're not having closing costs, even if you don't have any cost associated with that loan from the lender's side, you're still having upfront mortgage insurance every single time you refinance that FHA loan. Now, one cool thing about FHA is that if you've had the loan for less than 3 years, they'll actually reimburse you for part of your old upfront mortgage insurance premium that you had with your previous loan. But once you get outside of a year, the amount that they're refunding is pretty minimal. You're not going to look at it and go, God, I'm glad I refinanced again and had to pay this bigger fee and I'm getting this small fee back. A lot of times it's not really going to make sense like that. And one thing I want to be very transparent on is lenders will allow you to roll your closing costs into your loan when doing an FHA loan. And they'll also allow you to go back into a 30-year term every single time you do it. I would really like you to consider how that makes your loan balance go up and it pushes your term back out to a 30-year period of time. So before you go and consider refinancing, understand the downsides, understand the cons that I just talked about. Having to pay that upfront mortgage insurance premium again, having to potentially come out of pocket with money if the lender's not able to cover your closing costs, or if you don't want them rolled into your loan. Ideally, you're not rolling your closing cost into your loan every single time you refinance, because otherwise you're just adding back to that principal balance. And if your goal is to pay off your mortgage, if your goal is to be debt-free at some point in the future, refinancing in many cases can reset that if it's not done correctly. So just make sure when you're going through that process, you're working with a professional. As I mentioned earlier, my team and I would love to be that person that you talk to, at least to get a second quote from, to make sure you're getting a good deal. That link to get a hold of us is in the description below. Now I want to transition to the pros and cons that I mentioned just a moment ago. The pros are that you can potentially lower your monthly mortgage payments by refinancing with a streamlined process. No income verification, no appraisal required, so you're not having to pay for an appraisal, you're not having to provide income documentation, no pay stubs, no tax returns, none of that stuff. On top of that, the process is a lot simpler. It's a lot easier than it is going through it that very first time. So if it was a difficult process to begin with, this time it's going to be easier. If it was a really simple process to begin with, it's going to be even simpler this time. And on the flip side, the cons are that you're having to pay that mortgage insurance premium again, that upfront mortgage insurance premium. In addition to that, limited cash out option. You're not able to do a cash out refinance when doing an FHA Streamline. And the last thing is you must have an FHA loan. You can't do an FHA Streamline from a conventional loan. You have to have an FHA loan in place when you're doing this streamline. Now, with that said, I want to take a minute here and talk about the times when you should actually consider doing an FHA Streamline, when it actually makes sense. And the primary one that comes to mind, and really the only one I can think of, is that when you have a higher interest rate than where interest rates are currently in the market. If you got a loan between 2020 and 2022, there's a high likelihood it's not going to make sense to refinance right now. If you got it towards the end of 2022 up to now, interest rates have actually moved down considerably since that period of time. So there's a really high likelihood that it could make sense. But here's the good news. Interest rates are likely going to continue to trend lower. Now, maybe not in a straight line, but interest rates are likely to head down from where they currently are at the moment, which means if you're already a candidate to take advantage of the refinance, then chances are it's going to get better. So why not take advantage of it now and take advantage of it again? And on the flip side, if it's not quite where you need to be at the moment to have that net tangible benefit, then just hold on. Hold your horses, if you will, and wait for rates to continue to trend lower. And hopefully there's an opportunity there. Now, if you're just watching this for the very first time, you're wondering about FHA loans, where do you start? What else is needed in order to start with an FHA loan? Do me a favor and check out this video here.